oil prices have cooled off considerably since peaking last summer, but with summer coming up, it's driving season, and that's going to probably move the cost of oil up substantially. Here to talk about that is a fourth-generation oil and gas professional. He is the author of The Upside of Oil and Gas Investing. Jay Young joins me. Jay, good morning to you, sir.
Good morning, Ron. How you doing today?
I'm doing all right. So crude was recently in the mid-70s. It had peaked at over $120 a barrel following Russia's invasion of Ukraine. But, Jay, I understand that oil prices could very well hit $100 a barrel this summer.
Yeah, I do believe that. We're just not drilling full in the United States, like we should be. And it's all about supply and demand, with Putin and our government and a lot of other things that are driving capital, because you need a lot of money to drill a well or drill multiple wells to keep up with that, demand. And if we don't have the demand, and if we have the demand, I'm sorry, we have the demand this early. But if we don't have the supply necessary to meet that demand, and all of a sudden, man, our demand continues to go up, which I do feel like it will in this summer and after the financial crisis, and a lot of things have kind of hurt oil prices. I think this is a great buying opportunity. I think this is a great time to invest at these lower prices right now. We're getting rig counts, and we're seeing that going down, and now's a good time and an opportunity to, as they always say, how do you make money? Well, buy low, sell high, and that's what we're looking forward to doing here with, because when we drill a well, it's all about getting your contractors and getting services necessary to drill the well, and we can get some really good prices right now. So we're doubling down, if you will, on getting those rigs, for longer term contracts, and saying, hey, because look, natural gas prices are down, and most of our wells will produce oil and gas, and people aren't drilling right now, and that's what happens when prices go down. People just quit drilling. And when you quit drilling and all of a sudden the demand starts screaming back, as I feel like it will this summer at the end of this year, and we don't have the oil necessary, then you're going to see prices go up. So I do feel like it's a good time to look at the opportunity to participate either in stocks, or we do alternative investments at kingoperating.com, and I write about it in my book, The Upside of Oil and Gas Investing, which you can send me a note, and I'll if you're a credit investor and you're one of the next 5 people that come on my website, I would not mind sending you an autographed copy of my book that I wrote at kingoperating.com. But it's all about buy low, sell high, and I feel like this is an opportunity right now to look at something. If you've got a few bucks, go in and buy a stock on the stock market, and I feel like this is a good time, and like I said, an opportunity to look at participating, because I do feel like prices are low at $70 a barrel, which they are right now, and there's going to be I think this is a good buying opportunity.
Jay Young is the author of the book, The Upside of Oil and Gas Investing. He joins me on the program. I understand Russia recently said it would cut its production by 500,000 barrels per day starting this month due to the impact of sanctions on its economy. And I suppose that is going to take its toll in terms of moving the cost of oil well past the $70 per barrel mark.
Absolutely. And you'll see, countries like Russia, for an example. I know nobody's really a fan of Russia, obviously, for what they've done, but they're producing 11 million barrels of oil a day, 11 million barrels a day, and they only use like 3 or 4. So they have 7 million barrels a day. People are, where's all this money come from? And how do these Russian people make all this money? Well, if you're producing 6-7 million barrels a day and you don't use it, and it's the governments or it's the people in the higher up of government, that's a lot of money. Put that into your calculator, and I'll tell you what, you'll see billionaires made overnight because of the Russian oil crisis. And when they have so much oil and they want to charge so much money for it, and when they're saying, well, we don't like prices at $50, $60 a barrel, all of a sudden if they just start cutting it and they limit that supply, you're going to see prices go up, and that's exactly what they're doing. And like in the United States, we need 20 million barrels a day. We're only producing 13, so we're not in that area of, producing more oil than we need. So therefore, we have to go to people like Russia and these other countries to get oil. And because of that, we're kind of at the beck and call, if you will, or we have to answer to all these other people because they just don't. We need oil. We need oil. Our appetite, or our George Bush said in the 2006 State of the Union address, he said, we have a huge addiction to oil, and we do in the United States, and we just don't produce it, and we need it.
Jay Young joining me. He's a fourth-generation oil and gas professional. Jay, I'm looking at the EIA.gov website, which gives us an idea of how much oil is produced in this country. And as you pointed out, close to 13 million barrels per day. Unfortunately, as you pointed out, we're trying or using 20 million barrels a day. I've never seen the United States produce 20 million barrels of oil per day. So we're always looking to get oil from somewhere, even when former President Trump was president.
Right, exactly. Yeah, we've never been energy independent, as people said, but we're more energy independent on countries that aren't trying to kill us. That aren't trying to bomb us every 15 seconds. So I think that's more about what they were saying, along with our refineries in the United States can only handle 13 million barrels a day. So when we go to 14 million barrels a day under Trump, we're exporting oil because we can't refine it here in the United States. So, we're not going to put any new refineries in different places. We're not going to build any refineries anytime soon. So, but yeah, you're exactly right, Ron, when you're talking about, we haven't produced enough oil in the United States. I mean, I don't know. Maybe during some of the world wars or something back at that time. I'd have to do the research, which I have not done. But I know in today's world, it's a market out there, and instead of people thinking that there's a bunch of us cowboys and hats and cognacs and cigars and cowboy boots and us in the back room, how to put prices together and hey, let's charge 20 more cents today, or we don't fix the prices at all. Oil and gas companies don't fix the prices. We don't fix the prices. It's all about supply and demand, and unfortunate, that consumers are paying, $2.50, $3 a gallon. I mean, but it's not up to us. It's up to the supply and demand. And when you see that much oil, I mean, think about 5 or 6 million in Iraq and Iran and all these other countries. They have all this oil that, China uses 16 million barrels a day. There's so much oil on the market. There's like 100 million barrels a day. And unfortunately, the huge countries that use this aren't the ones that produce it. And that's why you're seeing the prices, go up. And world wars are started because of it. And, Russia cutting production back 500,000 doesn't mean they don't want the money. It's because they're trying to make that price higher by limiting supply.
Jay, thank you so much for coming on board. Really do appreciate it.
Absolutely, Ron. Have me on anytime.
All righty.
Next month, and let's get an update.
Yes, sir. He is the author of The Upside of Oil and Gas Investing, Jay Young.